Good morning, folks. How are you? Hope you're doing well. Hope you're doing well. All right. So obviously, we've had an enormous rally off of FOMC. This is from last week where I said that I thought that the low for last week was in. We had an enormous rally up. There's a couple places in price action I want you to be aware of that I'm monitoring. Yesterday, we just bumped that high right there. And still, I think this is a little too smooth. So while this was, look at the high, 30,062 half, 30,074 even. So just just barely above it. But I'm looking at it like this. Okay. And we've had basically 1, 2, 3, 4 days in a row. Now we're having 1 day back and we're starting today softer. I don't think we're going to leave today on a down close. I think we're going to try to make an attempt to continue going higher. It's normal for it to have a little bit of a break rallying so hard. So we have a volume imbalance here up to yesterday's low. So there's our range for daily inefficiency. And we have this area right over here. Notice there's no volume imbalance. So no volume imbalance there. So we have this to the volume imbalance low there. So we're now just bumping up against inversion fair value gap here. And it's an old high. Okay, so looking to the left, because there's a gap, we have this wick here. So one of the things I would want to see it do is to overcome this wick with this. As I've taught pretty extensively with Forex and futures trading, if you're brand new, non-farm payroll weeks, the best price action, the cleanest price action is going to be on the Monday, Tuesday, and Wednesday up to around 11 o'clock in the morning. If you're brand new, very low experience, and it's not weakness to admit that, it's actually maturity and being responsible. Everybody wants to be the professional. They want to know everything or assume they know everything when they first start, or they want to participate in every possible move, and it's not realistic. But see here, we just dropped sharply down into that, and I want to delineate the 7 o'clock time we just entered, and then up to 9. So inside this little area in here, we're going to drop down to the 1 minute chart. So here we have our little pre-market session time. All right. And I'm going to move this over just a little bit. And there is a gap right there, a suspension block. I like that. I'm going to go long in there. And you see this wick? If you look at what basically half that wick is, it's the high of that inversion fair value gap, but this highlighted. Again, you can see it's not market replay, folks. No need for that. Okay. All right. So I'm entering exactly at the consequent encroachment of this gap right here after we hit the inversion fair value gap on the daily chart. So it's reasonable to anticipate a pop, especially after it drops real quick. So it was in a hurry to get here. And these relative equal highs and these relative equal highs. And then remember I showed you that level is the wick I want to see price get above on the daily chart. Okay, rewind the video for a couple seconds and you'll see again what that level is. All right, so I tweeted also that a level I want to see until we get through non-farm payrolls week. We have today and tomorrow for that. If we scrub back, you can see they've left a couple areas there smooth. That area like that. Like that. Look how much energy was shown after creating these relative equal highs. So I like this for non-farm payroll. We'll use that right there. So that's that. I tweeted that one. It's an area I'm interested in. So when I'm tweeting on a level, I want to see something technically align with that. And I got caught up in my dialogue and didn't even set the stop loss. I started to talk about it. I don't know if you can tell, I just got up about 15 minutes ago, fed the pups, and that's it. But I was telling you about this wick. See how it's basically consequent encroachment is the top of that inversion fair value gap. So the stop loss has to start and open up on a trade just right at that level and under. Okay. So there you go. Apologize. So initially, we're going to look for a run into this relative equal high. And we want to see price now also is it's like a threshold. Think of it like a ladder. Now, don't think in terms of depth of market, like a ladder like that, but think of it like this. We have this big vertical decline in one single candle. So that low, which is the highest point of that inefficiency, to this volume imbalance low right there. We want to see price show a willingness to get above this midpoint level and start laying bodies above that. Okay. And you can add, if you want to be very like purist, if you will, you can add all of the levels that's been given to you for grading. That one. And there it is. Okay. So now you can watch inside of this range on a 1 minute chart. You can watch how price is utilizing these levels. And I'll put a limit order just to get a one contract off right above there. So I'll sell one there. Right. So notice how we're getting that nice little pop here. So I went outside trying to feed the deer a banana. She had a baby with her. I was trying to coax it. Usually I can call them over to me and they'll get real close and eat whatever I toss out there, like fruit and whatever. So I spent a little bit more time than I should have. I could have been in here with this, but that's okay. I mean, you can see how fast we're getting in here. Now look at that line right there. See how we're above it? That bodes well. Okay. So what I can do now is wait to see this candlestick close above halfway. Then I can roll the stop up from here up just below these lows right there. We want to see it overlap all of this decline and rip above here and then stay above it, because then the next order of business would be looking at the order flow relative to these relative equal highs. All right, so now I can roll the stop up. How easy that is? Easy peasy, lemon squeezy. Okay, I always like to look for when the market's like really suppressed or it's had like a blow off move to the upside, and then it reaches into a nice key daily level, as I indicated at the beginning of this recording here. Um, we're seeing that there. So this was a massive decline. It gets everybody excited. Oh, it's going to be a big bearish day. And we're already coming back this aggressive. Okay, so just think for a moment. I teach my students to do this. If we were to assume we were part of the shorts here, okay, say you was one that went short and you have your stop loss just above that high, how safe are you feeling right now? Where we're at right now, how fast we come off of that daily inversion fair value gap. We supported price here with this, and it ripped higher. Looks like it's trying to get somewhere, doesn't it? When the market shows willingness to keep running like that, it's going for liquidity. Okay. And these are the last of the bears that just came in, and they were rewarded. Sometimes you can be offside and have a short lived moment of unrealized profitability. The problem is many times it's not recognized by the individuals while they're in the trade that they should have collapsed and took profits. So now, again, we're watching this line in here. We want to see the willingness of price to want to stay above that. Okay, and I'm going to actually roll the stop just to cover commissions. About do it and give me a pizza dinner for the gang. I don't eat pizza anymore. I'd like to toss that out there just for dialogue. Keeping with the conversation I was bringing up earlier, if you're new to my channel, if you're new to me, if you're not familiar with the things I teach or the conceptual ideas around days of the week, weeks of the month, specific months of the year, there's a rhyme and reason as to why I believe certain things should happen or should not happen in price. And non-farm payroll is a report that comes out usually the first week of every month, and it's the Friday that they release the non-farm payroll numbers for the United States, and it's a widely traded. It used to be really um, something that intraday traders and short-term traders would really like to gamble on. Over the years, I've seen that the data really isn't trustworthy. Not that I ever really cared about the numbers themselves. It's the invitation of a wonderful day of anticipation, expecting large volatility that's timed right at 8:30 on non-farm payroll Fridays. They're extremely unpredictable. You don't really know for certain what they're going to do because the data isn't always trustworthy. And I've seen many times where the jobs data should be extremely bullish if we're going to be fundamentally aligned with what price is doing. And I don't believe that the markets entirely are doing that. I believe commodity markets like food, energy, um, I'll come back to energy in a second, food and grains, meats and things like that, um, cotton, things that we use for clothing, grocery items that you have to eat. Those things are generally controlled by fundamental supply and demand factors. There really isn't any fundamental driving factors for like stocks or index futures like we're looking at here. It's perceived supply and demand factors, not trading. Okay, we're not talking about zones and things like that, but non-farm payroll for jobs data is one of the largest reports that is misinterpreted by traders. And I got caught up in the early years of my career. I started not November 5th, 1992. And when I was 14, 13, 14, going into my 16th year as a teenager, all through those years, my uncle was talking to me all the time. And he never one time mentioned fundamental data. Like, not that I'd learned how to trade well from my uncle, but that was my first introduction to it. And maybe if he would have talked about it, I probably would have been more more inclined, pardon me, more inclined to spend more time seeking out more information about it. It wasn't until my second year that I learned about fundamental data. And fundamentally, I thought it was stupid because if we're looking at something, for instance, non farm payroll data, we're looking at old information, expecting it to have an immediate impact on what already has been known by informed money. So, do you believe, honestly, especially in today's world, all the corruption and things, it's obvious? You don't think they had that information? Like they sat on the data for like a month, the information they sat on it, and the market had moved while people in the know, they have privileged seats like senators, they have inside information. They know things that are going to be approved for companies for sales, new products, new innovative ideas that are going to be brought to market. So they actually have VIP seating where they can actually assume trades, and it's illegal, really, but you wouldn't think it so much anymore. Insider trading is, it's in fashion. It's how these people get rich. So I'm just, I'm not a fan of fundamental analysis, let's put it that way. Maybe there was a time when things were more on the up and up, but I do believe it has a strong correlation to commodities like crops, like corn, grains, soybean, wheat, oats, because they end up in our grocery stores and people consume them. Livestock, like farms like cows, horses, they use those things. So there's a real supply and demand factor. If there isn't a bumper crop of corn, and say the crops come in lower than expected, that's going to have a direct correlation to the price of everything that uses corn, from corn in itself or to items that we buy at the grocery store that uses an ingredient. And livestock, the care for them, the cost of doing that is going to be harder for the the livestock farmers, okay, the people that raise the meat. So they're going to have to pay more for the food to take care of that. So what do you think they're going to do when it comes time for them to bring their livestock to market for slaughter? they're going to demand a higher price because it costs more to feed them. So I do believe there's a supply and demand factor that is strongly correlated to like agricultural markets, not so much with bonds, not so much with stocks, not so much with index futures. So it's kind of like a pseudoscience as a technical analyst when we're looking at markets that don't really have supply and demand factors. Okay. So, I mean, I guess one can argue, like everyone that's fanatical about these Pokemon cards, there's a supply and demand factor there for lunacy. Okay. But I would never invest money in something like that. It's just, it doesn't make any sense to me. It just makes no sense at all. But there's always a fool out there willing to pay more than you did if you wait long enough and market it appropriately. All right, so see how we did? Climbed all the way back up to that right there. It always bothers me when I bump the top of this and it shows here. It used to be my my concern would be I gotta erase this. Okay, look real close. You see that guy's face right here? Watch when I hover. See that upper left hand corner? That guy's not around anymore. I don't know why everybody's pretending he is. It's like Weekend at Bernie's, and you wonder why our future's looking pretty bleak. We have people out there that are running offices and seats that shouldn't be doing anything. All right, so it's how we're reaching above. Look at that. Look at this right here. That run right there. This going down into the daily inversion fair value gap. And then completely running over top of this and using the halfway point. None of the bodies close below that. You see that? See that? Isn't it interesting? So we'll see if we can get a little bit of an animation to the constant crush on that daily wick I gave you. Again, always reflecting that it is not market replay. You can see the entirety of my screen. I sat here and talked to you, probably bored you to death. Didn't give you anything that was interesting. Oops, you know what I didn't do? Sorry. I got into my talking and didn't even show the execution. I'm sorry. All right, so that's that. You can see there's the look right here. There's the fill right there, right above. Short-term high. Right there. Isn't that clever? Look at that. Probably luck. Okay. This already's many times better than most of the people out there that claim to know how to trade. You know, the guys in the comment section, they'll say, this is all made up stuff. He's cherry picking. They can't find something like this. They can't see the logic. They can't see any reason for it to anticipate a run, which I kind of like want to talk about that this weekend. Um, it'll be a space that I put on my YouTube channel. I don't want to be on X because X sometimes messes me up. Sometimes the audio doesn't permit me to be heard, and I believe that's intentional. And you can argue and believe whatever you want to believe, but I believe it's intentional. All right, so I'm going to see if I can get a contract off here. But if I do it on YouTube, it'll be like pre-recorded, so that way it'll be me just talking. Okay, and topic I want to talk about is generic price structure that yields continuous opportunities. In other words, if you knew everything, okay, if you knew everything that I have released in my teaching compendium on this YouTube channel, if you knew everything that I covered there, in and of itself, you would have a massive understanding about price action, framework that's available for setups, where price action generally creates the obvious areas of where price will run, like we outlined here on that daily inversion fair value gap. And then this one here By the way, why did I pick this one? You're probably asking, what's so significant about that? It's the last one on this run here. So all the energy it took from this high all the way down to that point right there. The last inefficiency, looking at this lowest down close, lowest candle of all this price run lower, start walking back to the left. There's no gap. There's a volume imbalance, but we already used that there. You see that? So that would have been an area, if I was sitting in front of the charts and ready to talk to you about it and recording, I would have put one of my entries there, and then I would have pyramided up in here. But it wasn't from the charts. Okay. I have a real life. I have responsibilities. Okay. I have puppies that I take care of, and they demand to be fed. Little brats. So keep working to the left. Okay. And then we don't have a gap in here because the wicks are bridging that up. We have a small little volume imbalance there. It gets used there. Opens, trades down into the volume imbalance, colors outside the inversion fair value gap, which is permissible. That's absolutely permissible. But then we have this suspension block. So we have that little volume imbalance there where the bodies don't connect or overlap. And then we have this section here where these two candlesticks, respectively, their bodies don't connect or overlap. So when we have a volume imbalance at the high and the low of an inefficiency, that's a suspension block. So you carry that information forward. And then you can see where obviously I went long right at the midpoint there. Now, why was I confident about that? Everything I just said. We traded down into this energetically on the daily chart. This is a key level. And key levels on a daily chart, you have a large degree of probability. That means the odds are in your favor. You're going to see a tradable price run. It doesn't mean that you're going to be profitable. It just means that you, as a trader, we need movement. Okay. Without motion, without movement in price action, it's impossible for us to profit. It's literally impossible. So, isn't it obvious that we have to spend more time looking for places where price may, on a consistent basis, provide those types of things where we can invite the opportunity to take on risk, measured risk, managing it impeccably, and then anticipate, not react, anticipate. Notice what I was doing down here when I was talking to you? I anticipated this drop down in here while it didn't happen live. I expected it to have this type of reaction here. I anticipated this area here to propel price up. It came up, half of it, then we closed outside of it, and then rallied up right there on that immediate candle where it started going higher. I felt that that is an area where it's reasonable for me to get long there because I had the backdrop up. We're in a daily inversion fair value gap. We have the volume imbalance. They used it right there. The algorithm immediately opened, traded right down into it. Let me show it to you visually. I got people sending me emails mad. If you're really a teacher, you would do this in front of us. No, and I'm not going to be guilted into it. Okay. Those are the individuals I mute online when you cry baby to me about how I should be doing this. No, I'm doing this for free. I'm not obligated to do any of these things. But as soon as you start twisting my arm saying, I'm only going to believe you, then don't believe me. As soon as you start a conversation with that, I'm only going to believe or I don't believe, okay, I'm not interested in hearing anything. So the volume imbalance there, you can see we traded down into it. Look at the open on this candlestick's price. 29,390.75. So just think 90.75. The low on this candlestick, 90.75. That's perfect, folks. And you want to talk to me about order flow and level 2 data and bubble charts and things like that. Not necessary. It's not necessary at all. So because it had shown these things, just by a quick glance, I don't need to talk about it. But many times, because I'm using a 1-minute chart, I'm operating inside of a time frame where it does not permit me the luxury of fluffing it. You have to know exactly what you're doing. You have to know exactly what you're doing, what it should do, what it should not be doing, and what's permissible and what's not permissible. In the beginning, it's like, this is impossible for me to know what it should be doing until you start recognizing patterns of volatility, price runs that are easily predictable. So we predicted that this is an area where we would have a sustained price run higher. We predicted that this was going to be a catalyst to send price higher. We predicted that price would completely erode and run right back over top of all of this and then go for the buy side here and here. It's done so handsomely. We predicted that price should be respecting this halfway point. Okay, consequent encroachment. That right there is not taught by Chris Laurie. I'm just going to toss that out there for the people that leave comments in other people's channels. I read that stuff. It's funny, it's comedy, but none of that stuff was ever taught by him, and no, I didn't learn from him. So the idea of it running up and taking that buy side there, we have this wick. We want to see the willingness of price action to support. Where are we at here with this fib? There it is. There to there. All right, so I'm going to take the other lines off. I know. Why don't you set up blah, blah, blah? I know. But I like showing it because so many people ask to see my fib settings. They get shoved in your face constantly. Okay. So I want to see price. Try to have a continued willingness to be above this Wix consequent encroachment. Okay. And then right there. Now, what I'm going to do is simply because this has been really energetic, I'm going to back off my demand of, because I supplied the demand, the that high. I want to take one off at that high because we've had such a nice run from here. Okay, you ever as a child ever eat taffy? Think about it. You grab it, you stretch it out, and as you stretch it out, it gets thinner and thinner and thinner and thinner, and eventually it'll droop down. That's what we have here. So it can give up the ghost below here. I prefer it don't. That means it could go down below that. And if it does, I would want to see it stay in the upper half of this gap. So what I just did was I gave you an if-then clause for the price action that's right now. Okay. Ideally, we want to see this wick support that. You don't ever hear anybody teach that. The only person that ever came out and talked about that was me. This gap here, if it were to go below this, okay, if it were to go down below that, which right now it's not showing any willingness to do that, which is nice. We're going to bring that up to there. So now we locked in. Nice little mortgage payment on a bungalow somewhere. I don't know. If it were to come back down in here, because it looks like it might want to do it now, this area up in here, it needs to show discount sensitivity. Okay, so that would be like this. Halfway point there up to that. Drag that over. We would want to see price. If it comes down in here, it needs to be reactive to the upside and not be so inclined to want to go all the way down here. That's why I have my stop loss here. It's below the midpoint of this wick right there. So if it's bullish, it need not go below this area here. Worst case scenario, it could wick down to that. I prefer it not do that. So I gave you, if it does this, if it doesn't go below here, which it's done, and continuously goes higher, that's really good. But if it does go below here, then I got this area where it has to show me a willingness to go higher. And because this is like a critical area, because I'm looking at this old high as a PD array, I'm looking at this upper portion of this buy side of balance sell side efficiency as a PD array, and I'm also looking at that wick right there. So there's my 3 PD arrays. If the third one, and the lowest one, is this upper portion of this buy side of balance sell side efficiency, okay, This gap, again, one of those things that Chris Lloyd did not teach. Okay. And I don't mean to be mean spirited, but I have to correct these people when they put that stuff out there because he didn't teach the upper half of a gap that's formed like this. That's where it's going to create the strongest form of buying for an entry, let's put it that way, because you want to see a small portion of the gap stay open. A small portion of a gap remaining open is an unwillingness to go lower. So if the market is unwilling to go lower while you're expecting higher prices, doesn't that by definition indicate that it's extremely strong? Of course, but nobody else thought that way before. So that's what you don't recognize. Just because you see me drawing boxes on my chart doesn't mean it's supply and demand, and it doesn't mean it's anything else from anyone else. I don't have a problem. If I would have learned it from somebody else, I'd been like, hey, this is where I learned it from. But it didn't. So I mean that's it. That's the truth. So let's see if it taps this little blue shaded area. If it comes down and stops me out, it's been a wonderful experiment. That wick up here, the consequent encouragement of that daily wick I was showing you earlier at the beginning of the session. So right away, let's say for instance that you were nervous, okay, and you didn't have the confidence, and you know that we're at a really nice level here, and you're just afraid it's going to come back too deep on you. You can just do this. Look how painless that was. You immediately remove the sting or the weight of I need to be right. I need to be right. You don't need to be right, but you do need to manage your emotions. And trade psychology is easily managed by rewarding yourself when the opportunity is there. Give yourself the cookie. Okay. Um, Trading and building your equity, you want your equity to increase. You want the weight of that number to increase. So, how does that happen? You consume new equity. It's like eating cookies. Okay. This is the only thing that you can do where you consume more and the weightiness of your bottom line increases. You want that number to be fat. In the beginning, you got to teach yourself to reward yourself with the cookie. Put your hand in the cookie jar when it's permissible. In this case, it's permissible. We've had an entry down here. Look at that reaction right there. See that? It's almost like I'm doing. It's crazy. The idea of rewarding yourself, giving yourself that little bit of a reward, and when you feel nervous, think about it. Like when I was a younger guy and I experienced anxiety, the the impulse to want to eat sweets would go way up. And I discovered that I was a nervous eater. And when I was in long periods of drawdown in the early stages of my development, I started eating very poorly. You know, snack cakes. I'm a bit of a baker, and I would make cakes, and then it would be nothing for me to basically eat the entire cake over a trading day. Pour milk and just eat right off the plate that I just created it. And if you're sitting there and you're stressed out and you're constantly eating sweets all the time, you're going to tear your health up. It's going to be very uncomfortable while you're stressed, and you're going to gain weight. In trading, you have to think, I want a cookie. When it's offered to me, I'm not gonna have my hands smacked or my rear end spanked by me taking profits. Okay. When people say, well, if you said that you thought, see what is this that there? That's the benefit of giving yourself the cookie. I took two off of three. If it comes down and stops me out, this point here from here, that's wonderful. See that? Painless. Painless. There's no argument about, well, I'm mad because it didn't go up here and get my next target here. Why would you be mad? Why would you be mad? Now, the next bit of business is we have this inefficiency real quick. The same thing I added as a measure of discount sensitivity would be the midpoint here up to there. If it's going to be continued to the upside, I would prefer it stay sensitive to not wanting to go lower while we're in this area here. Okay. And it would be nice to see it completely repel away from that and overlap that high, then start to stretch out and go up towards that daily wick I told you about in the consequent encouragement. But I don't want to be shorting it. If it goes up there, I'd be going short. The I lost my train of thought. Give me a second here. I'm going to let this be unedited too, by the way. There's a couple things like the cough and the clearing my throat and me just saying I just lost my train of thought. I'm going to keep it together because I want you to see everything down here, everything here time-wise, which is always New York local time. All these things are organic. They're not voiced over. And we talked about this price run happening. It delivered. It did not give me my second area, which was up here. And then I adjusted it for this. And then we failed once we got into here to go any higher. Now, I sensed a little disturbance in the force because we had this drop down in here. And then it showed that one candle where it looked like it was going to run. It opened, traded right down to that, and went right here, went right to the rejection block. And then it gave up the ghost. And then that's why we're seeing this bodies. Look at the bodies. It's below that Wicks consequent encroachment. That's why it got real heavy and weighty in here. So you see all those things I'm teaching, it's all happening in price action. But if you ever get into a position where you're now concerned about the outcome, or you feel like you're going to feel like a victim if it comes back against you and stops you out once you adjust your stop loss, as you saw me do earlier, and you have the ability to take a partial off, as soon as you start wrestling with that idea, especially if you're new, if you're inexperienced, the best thing you can do to reward what you have done thus far, and also to lessen the concern for those types of things, is to simply take something off. Don't think, oh, okay, it's going to go for my stop. I shouldn't have raised it up yet. Let me draw it back down. What are you doing? You're going to give back all of that unrealized potential gain by readjusting the stop loss once you raise it up. Commit to that. What you're saying is I'm going to be paid if it stops me out. Why would you want? Why would you want to? Would you go to work for someone, work all week long for an agreed salary, and then say, you know what, something just doesn't feel right. I'm going to go in and tell them to take a third of my payoff. Something doesn't feel right. That's what you're doing when you move your stop loss back and you take away the potential to get paid at whatever level it was you raised the stop up when you're long, or when you lowered it when you're short. As soon as you commit to a stop loss that's adjusted that way, stick with that. If you do that, I promise you, number one, it's going to create discipline. Two, you're managing, you don't feel it in the beginning, but you're managing the weight of right or wrong and fear and greed. You don't have the experience of recognizing it. That's what it does. So when you move your stop loss and you lock in some measure of profit, if you just watch the live streamers, and some of my students still have this little bit of an issue. If they move their stop loss and it starts to go towards their stop, you can listen to their breathing, watch their body language, and their facial expressions will start changing. They'll be concerned. They'll look like the guy at the poker table when you're watching the World Series of poker trading, and he's been stone faced the entire time, but now all of a sudden he's standing up. He's got his arms crossed. He's at everything on that trade. Is that, well, not that trade, but on that hand. Everything is committed and they can't hold it in anymore. That's what happens when you move a stop loss. But why would you want to say, all right, I moved it to a point of where I locked in. If it comes back against me, I'm going to get paid. That's a reward. Let it do its job. You hired that stop loss to do a job, take you out of a trade and pay you. You're going to get paid. If you get stopped out and you moved it into profit, you're going to get paid. Why are you looking at it any other way? Think. For those of you who've done this, you've never thought about it like that. I promise you, you don't think it like that. You think that you're being victimized. Oh, the market's so and so. Something happened. Trump is the big culprit now. He's being blamed for everything. No, you just suck. Okay, you don't know how to wrestle yourself and bring yourself under submission. You did something wrong. That's the reality. Okay, you moved your stop loss. You didn't take profit at a higher price. Okay, and here you watched me walk you through it. It was showing signs that okay, maybe it's something for me to illustrate. Take one of them off. Gave an indication like it wanted to go, but it only went right to the rejection block. Rejection block is the highest up close price in a swing high. That's this right there. Okay, see that? Once it started coming back down, as soon as you tap that, the concern for it to rally there, because I took a partial off there, right at the high, which would have been an area where I could have been reaching for there. I could have took two off. See it? Look at the price. See how they match? See that? That and that. It's basically the same thing. Hey, girls, look, I promised them I was going to edit these videos. Okay, you're going to mess it all up. So you're getting, in actual application over live price feed, doing executions, not market replay. Okay. Do you see any controls down here? Down here at the bottom? You don't see that. Okay, look. I'm moving things around. Look at this. Look at that. I would like to see if it can build the idea of climbing back up into this area here. And if it can support price again in that area and go higher, then we're going to consider going to this level. But if it folds and trades below here, below that low on a closing basis, then this is going to be the last line of defense for any bullishness on the initial, I guess, expectations this morning's session. But anyway, I think that's actually a perfect place to close this one down. And it's during a time where I teach you to focus. And between 7 o'clock Eastern time to 9 a.m., using the logic, pardon me, using the logic of the daily PD array, and it traded down to discount arrays on the daily chart. When it did that at this time at 7 o'clock in the morning, it did it aggressively. It ripped higher, create all this consolidation here, and then folded quickly. And now we're supporting the upper half, which is again something I told you I would like to see as a defensive view on price action. Does the price want to defend its market structure here? Now, if we can climb up into this, and reaccumulate and rally higher, then this over here would pretty much be a certainty. Okay, so I'm going to close this one here. Hurry up and compress it and render it and send it up onto YouTube and give you guys something to listen to, and then take it to heart. Okay, there's lots of opportunities, but unless you know what you are going to look for and anticipate and hunt, because that's what we're doing, we're hunting. We're not waiting for the deer, okay, to start running before we pursue it. It needs to walk in front of us in our pathway, and then we take it down to consume it. I don't hunt, but I'm just giving you an example, okay? Because predominantly most of my audience is men or male, and they tend to have a lean towards macho things like that. I don't think it's macho, but some people. I'm not. I'm like. I'm not like PETA level. You it was created for us to eat, but you have to learn to anticipate things, know when it's likely to do something, and then what does it do to support the idea. Once you believe it's going to go up, how should that movement start, the inception of that price run, and where's the footholds that continuously give continued feedback that that price run is sustainable. And I walked you through all of it here. Okay. So hopefully this is helpful to you. There's this one more piece of the puzzle explaining things. Okay. And there's technical science behind it, folks. You just got to spend a little bit more time with the old man. I promise where you end up, you'll enjoy it.